After 4 months of weakness and pain, Kancera is now trading at an utterly critical level. If this level holds up, it could pave the way for a new strong leg up. If not, it might just be game over for a long time to come. In the previous Kancera episodes, we talked about how this brutal sell-off candle right here was equivalent to getting hammered by Mayweather himself. That this on its own would leave Kancera crawling on the floor looking for its teeth for quite some time before having healed and recovered at all. We also discussed how it might in fact be a good idea to stay away from Kancera until it shows signs of reversal or renewed strength. That time might be now, and anybody who stepped out of the way of Mayweather's tireless punches would have saved themselves between 40 and 50% by now. For since then, Kancera has traded within this dragged out descending channel for no less than 4 months straight. And throughout this channel alone, Kancera has lost 55% of its value, and since its September peak it has lost a staggering 64% at most. But now Kancera might just have found those missing teeth, and here's why. But first, not financial advice. Not. And if this episode helps you better understand the current state of Kancera, then please like and subscribe below. Now, in the previous Kancera analysis, we made it clear that despite some anticipated pain ahead, it would likely not ruin the long-term prospect. The reason for this is Kancera's strong primary trend, which in turn is backed up by never-before-seen trading volumes to support this initial leg up. For this right here shows us that the upside is valid. And what is equally beneficial from a technical point of view is that the following downside has come at significantly decreased trading volumes. And this is great news. It means that the sellers or bears are neither too convinced about selling nor too strong in general. But for the long-term bullish trend to remain in play, Kancera ought to not go too much lower from here. Looking at Kancera from a zoomed out weekly perspective, this decline is in fact a sign of health, as the price has gone up by a staggering 1300% in just 5 months. Such steep move is technically never sustainable without pauses or corrections. And hence what we see here is likely just Kancera catching its breath before being ready to proceed higher. What typically happens in those declines is that all the get-rich-fast people who FOMOed in during the latter stages of this run-up now got rinsed out and discouraged from playing around with the stock again. For this right here is the market's own little way of punishing greedy market participants and bad traders. Now, there are certain things that I like about these current technicals, clues why we may in fact be in for a reversal, another strong leg up. First of all, the price has found support at the EMA 200 on the weekly. And as you know, if you follow this channel, the higher the time frame, the stronger the EMA 200 is. Or any EMA 2 for that matter. This on its own is of great importance in this episode, and we can see that the price has continuously respected this moving average historically. Secondly, looking at the daily chart on TradingView, the VPVR tells us there is massive support at this very level. What this goes on to show is how strong the trading volumes have been at any given price level. So when a normal volume candle indicates when the volume has occurred, the VPVR in turn indicates where, as in at what price level it has taken place. And what these bars represent is all the trading volumes that have gone on within this very chart frame. For if I were to zoom in or out on the chart or move it around, those levels will automatically adjust and change. This VPVR bar is quite extreme, and what it practically shows is that there are a lot of buyers ready to defend this level, which they have also done so far. Thirdly, this area is also held up by a horizontal support at 155, at which the price has some recent and somewhat relevant history. This on its own is not super strong, but combined with the weekly EMA 200 support and the VPVR, it definitely is. These three factors were enough for me to enter a good risk-to-reward swing trade, as any close below the 155 line would be greatly bearish and thus trigger my stop loss. And lastly, the price cannot stay within this descending channel forever. The longer it does so, the more likely it is to eventually break out of it. For given the strong cluster support and the fact that the price has decreased by as much as it has and at increasingly lower trading volumes, this is in fact, in my opinion, a technically good area to enter along. The support is just that strong. This level is on its own a deal breaker, and here is why. Any closing below this support cluster would be very bearish and enough to easily push the price down by another 35% to the horizontal support and the 786 fib. But the bearishness itself mostly lies in the fact that any such course of events would turn the weekly EMA 200 and VPVR support into very strong resistances. Those resistances would be antagonistic enough to suppress the price for a long time to come. Or to put it differently, Kancera would no longer be on the floor looking just for its teeth, it would be down on its knees looking for its head too. This would in fact be somewhat of a nightmare scenario for Kancera, as any moves up would likely be mere dead cat bounces to the actual cluster resistance. Having said that, do beware of fakeouts. Any move like this could end up tricking a lot of people by stopping them out and then reversing fast. Now, what does concern me a bit is how weak Kancera has been despite the strong across-the-board index moves. Many global indices and their respective stocks have been trading at gradual new all-time highs over the last few months, but not Kancera. The good news though is that as long as we stay above these supports, this could be the pivotal trend reversal we've all been waiting for. In such case, this 4-month price decrease could prove to be a mere power amassing correction for further moves up. But even if this were to be the key reversal spot for Kancera, I don't necessarily expect the price to take off to the moon right away. So before opening that vintage champagne of yours, or that 2-month-old bottle of milk at the back of your fridge, the price must first break above and stay above this individually strong resistance zone between 228 and 238, at which the price has historically bounced time and again. The next challenge after that is the resistance at 295. I would even go as far as to say that it would take a break above this level before we can expect to see any truly exciting movements in Kancera. For until then, it's all rehabilitation to repair this damage. The ideal scenario as I see it, and which is also the most likely one, would be if Kancera were to bottom out here and establish some sort of a rounded bottom, just like that of Cell Impact. That would pave the way for a steady and gradual return that could amass enough power to recover long term. At least this would be the healthiest and most sustainable way to get back on the horse and reach new highs. Apart from the 228 and 295 levels, I'm not gonna give any specific price targets for the simple reason it's a bit futile at the moment. But if Kancera were to break above these levels in due time, especially after a steady recovery, for example through a rounded bottom, then we're talking levels of 5 kroner and above. But whatever good things may happen, don't expect them to happen fast. The stock still has much work to do before any exciting targets are in play. And as a stock owner or trader, your main concern right now should be for Kancera to hold up this vastly critical level. That was all for now. Thank you and goodbye.